Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to talk about what different stocks you're looking at and your opinions on the market sentiment. Well, the market has been in absolute turmoil, especially given what's been happening with Russia and its invasion of Ukraine. This has resulted in all markets pretty much in the red, and the ruble is sitting at a record low, gold prices are through the roof, and the Russian stock market has crashed by around 45 to 50%. A lot of this uncertainty means that we see market crashes. Markets fear uncertainty. We don't have a clear idea of how long this will persist. The uncertainty will continue until we know when these tensions are going to ease. A lot of this was unexpected. Many did not anticipate an actual invasion of Ukraine. But at the same time, when it comes to the stock market, it's important to realize that the fundamentals of a company has not changed because of the current happenings in the political climate. Yes, there may be temporary dips in the stock market because of this uncertainty, but that's not to say that the fundamentals of a company have changed. In fact, now is the time that we see market lows and good opportunities as investors. Now, despite what's happening, it's important to look at what investors that are renowned throughout time who have achieved success in their investment portfolios are investing in. And Cathie Wood is a renowned billionaire investor that has had a track record of fantastic returns for Ark Invest. And she's a woman in a very male-dominated industry, and yet she has turned Ark Invest and her name into a household name. Ark Invest is a multi-billion-dollar giant, so whenever people hear the name Cathie Wood, they want to know what she's investing in. Cathie Wood is also known for investing in tech stocks, which are usually more risky but have higher growth potential. So let's take a look at two stocks she has added to the Ark Invest portfolio. The first stock is Genius Sports, and its ticker is GENI. Genius Sports is a tech firm that provides data management and integrity software services. They provide these services in the sports betting and media sector. Genius Sports actually works to improve the general quality of sports data for the benefit of leagues, teams, and fans, and it's become a major partner with more than 400 sports organizations. These include big names such as the NFL, NCAA, NASCAR, and PGA. Although it's been in business since 2016, Genius Sports only entered the public market in April of 2021 when it completed a SPAC merger with DMY Technology Group 2. The GENI ticker hit the stock exchange on April 21st, and the newly public company did start out with a clean balance sheet, so no debt and $145 million in cash on hand. But since then, the stock has declined 73%, with the majority of this company's share of losses coming since this past November. So although we are down, the current price is $5.36. The analyst rating consensus is a strong buy, with 7 a buy and 1 a hold. The analyst price target is $14.86, which is a whopping 177.24% upside. And this is based on 8 Wall Street analysts offering 12-month price targets. Interestingly enough, the month that GENI's stock saw the sell-off was after the Q3 earnings report was made public. This report said that the firm's third as a public entity showed revenues at $69.1 million, and this was up 70% year over year. And it had a solid lock on data services for the NFL, with 97% of US sports market using NFL data through Genius. At the same time, EPS did badly miss expectations, and it came in at 37 cents loss, whereas analysts had actually predicted a much lower EPS loss of 11 cents. But on a positive note, Genius Sports bumped their estimates of full year 2021 revenue to the range of $257 million to $262 million. Although it's only a small increase from previous guidance of $255 million to $260 million, the company's rapid revenue growth puts the new guidance within reach. The company is scheduled to report its Q4 and full year 2021 data on March 11th. And Cathie Wood clearly believes in Genius Sports. She picked up 2,229,757 shares in this stock during Q4. This is a clear vote of confidence. This brings her total holdings in GENI to move around 5.28 million shares, currently worth $28 million. And five-star analyst Ryan Sigdahl from Craig-Hallum deems it to be a buy as well, with a $22 price target, which is a whopping 320.65% upside. He said that we think expectations are set appropriately with potential upside. The company's value add to the industry is growing, and this is within real-time betting data, ad tech, personalized fan engagement, etc. And its competitive moat is expanding. While the puzzle is still being put together, we think that creates an opportunity to accumulate shares in a company that has the ingredients to be a sports powerhouse. The second stock that Cathie Wood has added to the Ark Invest portfolio is Archer Aviation, and its ticker is ACHR. Archer Aviation operates in a tech niche that will truly disrupt travel patterns. The company is one of many that is working on urban air mobility, developing a short-haul, electrically powered vertical takeoff and landing, which is shortened to eVTOL. This is an aircraft for use as a commuter air taxi in urban environments. And you know what? Recent years have shown improvements in battery technology, lightweight materials, computer networking, and online interfacing that makes short-range urban air transit using eVTOL platforms a workable idea. Archer is working on the Maker, which is a full-scale eVTOL prototype designed for safety and urban use. The Maker is capable of reaching 150 miles per hour and has a noise rating at just 45 decibels, which is an important factor in urban areas, and it can land on any helipad or other flat landing site without the need of a runway. The eVTOL approach is designed to alleviate ground traffic congestion problems in major cities. And according to Morgan Stanley, the markets for these new electric aircrafts could reach as high as $1.5 trillion by 2040. In September of last year, Archer raised capital through a SPAC transaction. This was combining with Atlas Crest Investment Corporation in a move that closed on September 16th. The merger brought the company $857.6 million in gross proceeds. Since then, the Archer stock has fallen by 69%. Now, part of this fall can be attributed to Archer operating in a highly speculative niche with a product that is still in the development stage. And there's also been major headwinds for the company on the legal fronts. For example, they had an employee, Dr. Jing Zhu, who was accused of stealing trade secrets from Wisk, a competing company operating as a joint venture with Boeing. Earlier this month, the U.S. Attorney's Office announced that it will not be bringing charges against Archer in connection with the accusation. The current price for Archer Aviation is $2.94. The analyst rating consensus is a moderate buy, and the analyst price target is $11.50, which is a whopping 291.16% upside based on 3 Wall Street analysts offering 12-month price targets. With these legal issues on their way to resolution, we can turn Cathie Wood's investment in ACHR. She has an existing stake of 5.737 million shares in the company, and in the past quarter, she bought up an additional 5.568 million shares. This was a 98% increase to her holding. Her stake in the company is now standing at 11,306,020 shares and is now worth $33.24 million. Andres Shepard from Cantor Fitzgerald gives it a price target of $14, which is a 382.76% upside. He says that we had previously noted that the overhang over the Wisk litigation was a contributing factor to the underperformance of the stock price. We believe that this outcome is favorable for ACHR's shares and provides added confirmation that Wisk's claims lack substantial factual basis. We view this as a positive catalyst and note that the perceived risk around Wisk's litigation continues to lose traction. So guys, those are the two stocks that Cathie Wood has added to Ark Invest portfolio. Let us know what you guys think of these two stocks. Are you guys bullish on it? And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when the TipRanks channel releases a video. Remember, this is not financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I'll see you in the next video. Bye!